Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. And there it is, the dollar index again. Stumbling and bumbling. I think that's the only way to describe it. Stumbling and bumbling. I think they're very comfortable with the idea. It's starting to grow here that there'll be one interest rate cut somewhere in the middle of the summer. Maybe June, July, something like that, and they'll sit back and watch. And that is pretty much where we're at. Also, I think it's becoming very clear that the average voter for the election that's coming up, today is Super Tuesday, so the big primary is today. Mr. Trump might lock it up as guaranteed as the Republican candidate today. And if he doesn't do it this week, he will probably do it by next week, one or the other at this point. There's 15 states voting, and there's something like 815 delegates at stake, and more than likely Mr. Trump will win 800 of them or something like that, or 775, and that'll put him up to the 1100 area, and he needs 1215, and then in the next week is about 3 primaries, and he will win those with no problem again. He's basically sweeping it. And he only lost Washington, D.C. He lost the swamp by 600 some odd votes, so that was nothing. And even so, it was only 14 delegates, so it didn't mean much. But again, he's very close to locking it in between today. More than likely not. He should be off by about 100. And then next week he will get the 100 that he needs, and he will have it locked in as the candidate. And I guess everybody knows the Supreme Court came out and said this is ridiculous. You can't do what you're trying to do to him, and it's against the law. That doesn't hold back Mr. Biden from doing anything particular. When it's against the law, he doesn't pay attention anyway. It's odd, very odd. The whole thing is very odd, and so. We're at a point now where that'll be over with, and we've seen how Mr. Trump governed. It's not like we don't know. In other words, everybody likes his policies. So we know that money is going to be, and this is what this conversation's all about to begin with. Oh, and let's put the chat line up. This conversation is about money, and the way money is treated, and the way money is invested, and the way money is, basically warehoused. In other words, you plug it into a bank or a CD or, an IPO or whatever way you're trying to take your capital and make more of it. That's the whole idea always, is to make more, not less. So there's Robin. Hey, Robin. Let's see, who else has 50 years of trading? Yeah, there you go. I hear you. This is true, Robin. It's very true. Let them, everybody look in and, everybody will do what they'll do. That's what free will is. That's what the free markets are all about. Hey, I'm a monkey. That's what I am. Woo, woo, woo. All right. So there's the dollar index. Let's put the intraday dollar up there, too. Let's see what that's doing. And DX right there, and there is the dollar index. As you can see, it's trying to perk up again. Whoop. What do we do there? Let's try doing that again. You can see over the last 7 days, right there, it's trying to lift up this morning. Yesterday, that's the 4th, it pushed into the sell, and obviously the weekly is starting to generate into the sell now too. So there's a little, there's been pairs trading on the plus side, selling dollars, buying euros. In this case here, in this case here, it's all 6 of the pairs trades. But up top, you can see here's the dollar index on an intraday basis. Let's put that up on the screen. Right there, you see it's lifting up, and you can see it's trying to head towards the highs of the day. Matter of fact, where did we go yesterday? Do we have yesterday? Let's go to look at yesterday, because we were looking at yesterday in the morning during the webinar. We were looking at it, and it was got down to that. We said we'd go back to it. There's the line to it even, right there. It got down to 10. Let's see, where's that? That's 057. It got down to here. That's where it made the low. At 103, was it like 39? Let's see, what is that? That is the fourth, yeah. 103.39 during the webinar. I think that's how. Where's the webinar yesterday? It was somewhere around in here. I guess that's 103.70. I think we have to add another day to it because we had some traders here, getting involved in the trade. Let's do this. Let's go put 3 days in there and see if that'll straighten it out. Oh no, you know what that is? That's the dollar index. Let's go. It's not that. It's not the dollar index. It was the euro. Traders were trading the euro. Let's go over to the euro. Let's get out of that. That's what it was. It was people trading the euro yesterday. And let's take a look at it. Let me see. Where's the euro? There's the dollar, and there's the S&Ps. Where's the euro at? Where'd our euro go? Oh, I see, right there. Still something seems odd. Where's the euro at? Oh, there it is, down at the bottom. And so yesterday, let's see if we can slide it back to yesterday. Okay, let's go. We have to put an extra day in there. That's what it is. Let's put an extra day into that. Remember, we live and die by our math all the time here. We have no problem doing that. Okay, and there it is right there. So yesterday morning, there should be a line in there too. We were watching it. Let's see, where is it at? So the euro drift down to, is this right? Are we getting the right time there? That's the fifth. We want the fourth. That is the fourth. Okay. That's fourth. Right here, there's the line. And we saw it during the webinar. It touched there, went into the buy. We thought it might get down to 108.35 just because that was the day before its close. But it didn't seem to do that. It went into the buy, climbed back up to 108.65. And you can see it got up to 108.58, 60, bounced around again. Did it even challenge that low again? Yep, right there. Went to 44 this morning. Went to, did the 40 again here? 104.15. And bounced back up to the 85s. And here we are at 108.46 at the moment. And then the sell. Ooh, I should have grabbed that line. Let me grab that line. So we don't have to make another one. And so it keeps on. There it is. Nope, that's not it. Let's go like this. Move it over. And that line is somewhere around there. I just had it. I should have made a line at that point. There it is. Move that over. There we are. There's the buy there again. It's been, I want to say, this is intraday and it looks like mountains and valleys and, it looks big, but it's not that big. It really isn't. When you go over and look at the daily, and the daily is basically just stumbling around, it's really, look how kind of dead it is, just parked on that Fibonacci line that we've been following for a year and a half. Just parked on it. Breaks down every so often, fails at it, and then comes back. Now this is the daily. And you can see we went into the sell on, where was that? That was on Thursday of last week. Yeah, Thursday of last week. And yesterday we went back into the buy right there. Right there. There's the buy. And you can see the weekly's playing with the buy 2 days in a row now. It's just flirting around with it, just pushing on it. And it's, there's with I think there's a lot of confidence that there will be an interest rate cut, going out there in the next 3 months. Where are we at now? We're in March. So March, April, May, probably May or June, there'll be that one interest rate cut of a 1/4 percentage point. But, we here at Chicago Quant Technologies believe that we're going to see inflation show more strength. So that's going to be, very nervous for the Federal Reserve. They do not want to get trapped into lowering rates and instigating more inflation again during an election year. They would rather just leave the status quo. And that's what the markets are seeing, and that's why we keep on seeing the dollar index. Let's just put the dollar index up here real quick. That's why the dollar index is acting the way it does. And that, you should see the metals yesterday, the way they took off. Where's the dollar index? Right there. I mean, look at that flat line. We see the little noise going on. But look at that. I mean, honestly, we talked about this move. We can get rid of that. And we can get rid of that line like so. We're just talking about the strength of it, not the slope of it. And you can see here it's just kind of holding up, hanging out in the 104 area. It ran almost up to 105. We really don't see this thing changing much direction, and it should look like this now for the next couple of months. And so you'll have your natural growth or activity in the euro and the British pound and so forth for, economic reasons, legitimate economic reasons, like, someone needs to buy, Rolls-Royce engines, or something like that, and they're, like, say, $180 million worth of them. They'll have to, buy British pounds, sell dollars. You're going to see that type of action. Same thing, if it's Siemens and generators or whatever. Royal Dutch Shell transferring oil or, in other words, it's going to be fundamentals that are going to move these things. And at the same time, you can see here, it's not really moving that much at all. And there's not that much of a reason to believe that it's going to move that much. Excuse me. I should put a piece of gum in my mouth. Just talking, my throat feels a little dry, so we're going to take another sip of tea, see if that'll help out. Yes, there we are. So, and then when we go into the intraday, let's go back to that intraday. What was that? We were looking at the euro. What were we looking at? There, yeah, that's the dollar index. And when you look at that, I mean, it doesn't exactly look that exciting. It's pretty docile. And one of the most, I guess you could say, mature, trusted Federal Reserve people, speaking above, besides Mr. What's his name, Mr. Powell, basically saying, the smartest thing we can do is only raise once. Drop interest rates once in the States here in the third quarter, and then pause and watch to see what goes on after the election. Then they can do more things if they need to do. Remember, right now our economy is doing okay. It's a socialist economy to some small effect, but it is growing on the socialist side, and it's not growing on the what we refer to as the private sector side. So in other words, government stimulation, they plow money in, and it makes the statistics look pretty good. Unemployment's down below 4% or at 4%. You have GDP in the high 2s, low 3s. From the government stimulations, and so that's why the Federal Reserve is not so fast to want to cut, because it's our economy looks healthy. It does look healthy. Unfortunately, it's coming from the government. It's not coming from the private sector. Private sector is laying people off. People are losing jobs. Inflation is still there, not going down. It's just slowing its growth. And so that's why the game, I guess you could call it, or the confusion or the decision making, basically I guess you could call it the decision making problem about lowering rates In other words, the White House says, "Hey, look, we're doing fine. Inflation is gone." They keep on telling us inflation's gone, and they said lower the rates, make it easy for people to buy houses and buy cars, and they want to stimulate. Problem is that it only really grows well when the private sector generates those jobs, not the government, because remember, you have to tax people to pay for the government growth. So in other words, you're taking your money out. If you have 30 euros in your pocket, and you put them in the right pocket, and then you go take the 30 euros out of your right pocket and put it in the left pocket of your pants or your shirt or your jacket, you still only have 30 euros. And the socialists here in the States always want to say, no, now you have 60, because you have 30 in the right pocket and you have 30 in the left pocket. And you go, no. And they go, yes, you have 30 euros in the right pocket, put it in the left pocket, and you have 60. And that's just not the way it works. It just doesn't grow economies. Matter of fact, I have a friend who's at United Parcel. He's up in management, and he's laying off something. They announced after they got this big contract about 2 months ago. And they gave this big raises to everybody. Now they are laying off people. They're laying off 30,000 nationally. It's one of the biggest companies in the United States. They're laying off 30,000 people, and and every other day he's got to lay off 6 or 7 people, and figure out which ones are the most, who's important, who's not important, and deal with the union at the same time. And he's part of management, and so that's the problem. Is our private sector is not growing at all. Our private sector is shrinking. And that's where creation comes from. And government, they take money from you in taxes to grow. And it never grows because they're taking money from you. So they're taking money out of your right pocket, putting it in your left pocket, and saying, see, you got more money in your left pocket now. It's like, yeah, but we took it from our right pocket. Oh, no, don't worry about that. You have 30 euros in your left pocket now, so that's all that counts. And obviously you realize how crazy that is. That's why Europe is barely growing, and any of these countries that try to have a level of socialism kind of confuses the whole thing. So, and that's where we're at. That's why we can't get the interest rates to go down, and that's why the dollar holds up. It's just basic mechanics. It's nothing more than that. It's not anything too complicated. All right. So from there, we'll go over to the euro, see what the euro is doing, see how it's dancing as we did before. We showed you. There's the euro, and it's literally married to this Fibonacci line that we've had now for over a year and a half that we're watching. It goes down to it, bounces around. There's obviously this might mean that Siemens and Royal Dutch Shell and Mercedes might have just sold X amount of product from the continent in Europe, and they need to they need to convert their money to euros from dollars, and that's all that is, and vice versa. When it drops below the line, it's just natural, basic mechanics of buying and selling. That's all it is. All right, from there we'll go over to the British pound. Right there, British pound has shown a little more strength. It's up over the weekly as the euro is, and you see it right there. It's going to close in the weekly buy the way it's going with no problem. And there's a 99% chance since it broke the manifold here, and it's Tuesday. If it's it's the chances of it 99% that it's going to close in a weekly buy at this point. And we went into the daily buy yesterday right there, and we saw the euro British pound pairs trade. We had the British pound lifted again from that. Let's put the sell in there too. There's the sell. There we are. So there's the daily. You see the strength and weakness of that daily. What else can we say about that? Let's check it out. The intraday. Right there. You see the same thing. It went into the buy right here. Right there, it's in the buy. Oop. Move that over. Oop. Oh, what's wrong with that thing? It's going sideways on me. There we are. Went into the buy right there. It's just drifting up mildly. Nothing major. Just like when it went into the sell over here. That barely went down at all. It went more up than down. Did make a new low there, but I mean overall, and then you can see here's another one. There was the sell right there. That was more of the winner chicken dinner. And then the buy obviously was right there. And just a mild climb. And then you can see right here, right there was the buy. That was a mild climb up and a win. And then there's your sell. That was a mild win. And right there was a buy, and that was a mild win all the way up to right there. And then there's your sell there, mild win. And that's, we talk about it. We're 8.5 out of 10 times. So if you learn how to manage your risk, you can be a winner chicken dinner. All right, from there, where do we go from there? We go over to, we're looking at the British pound, so we'll go over and look at the Swiss because we're not getting any questions in particular here today. It's kind of quiet. Doc just cruising along. So let's go over and look at the Swiss. Swissy. Right there. You see the Swiss, we give them a lot of credit. They've jumped ahead. They realized that the inflation was kicking up in their country, and sure enough, they just quickly jumped into it and started defending it, which is, important, Very, very important. Very, very important. Not to allow the inflation to get any legs and start to take off. Because that's really the problem with it all is that, I don't really want to get into the whole mesh, but the Secretary of Treasurer and Mr. Powell and, Mr. Biden wanted to call it transitory for over almost a year and a half, a year and 15 months. They just kept on calling it transitory. Don't worry about it. And it went running from 1.41 to be exact, all the way up to almost 10. So that's put us on the back foot. Basically put us in the hole, basically, and we can't get out of it. Little sip of the tea there again. And then we go over to the yen. Now that let's put it up on the screen here. There's the Nikkei. We're going to go over to beta, put up the Nikkei, and then we'll look at the currency itself. But look at the Nikkei. It's been climbing. We've been in a weekly buy there for over 10 weeks. And it's gone from the 34,000 up to the 40,000, which is really cool. That's that was a 35-year high. Now we're at all-time highs, which is fantastic. It's more of an inflationary situation going on, but we've also seen. Let's go back over to. Right there. Let's do this. We'll put the. Where is it at? Right there. You see, it's playing with the daily buy right there, and basically, we've seen this product, unfortunately, go from through that same time period, come from the 105, 115. Where is it at? Can we even get there? That's why we miss J4X. we've seen this is the inflation. We've gone from basically 105 up to 150, 1.50, 1.50 from 1.05. So the move is more based off of inflation because of the currency has lost 50% of its value. And so when you have inflation, best thing you can buy is one of the best things is the companies that sell product to everybody, because supply, you need to buy whatever you need to buy, food, clothing, so forth, fuel. And so they and the companies themselves end up making money because inflation is lifting. They don't they can pass their prices along because people need them. It's that situation. So you can see right there. You see it is trying to lift up. We're going even, obviously it's at the high end of its range. I think the 152 area, let's see, where is it at? 150. I think we're looking at 152 is the high. There it is, right there, back in November of last year. And that's when we started doing a Fibonacci thing there. Someone asked about that. We threw it in. And let's see if we can see it. The high was 151.91. So we've basically marched up to the 152 area from the 105 area. And so you're seeing that the yen has lost, 50%. That's a big number. We've seen with Turkey, what we call the great experiments, going from 1 to 35. 35. I can't even imagine the yen going to 2, let alone 135. Or the 35, so that is really the gist of it all at this point. That is what where we're at. There we are. And what else can we say about any of this? Let's see. There we go. Let's just answer that text that just came through. And that is the yen. So what we'll do is we'll slide over to South African rand. And wait till you see the metals, the way the metals have taken off. I guess the hope of lower interest rates, the challenge to all-time highs of the crypto Bitcoin yesterday, and just stuff like that has really got them on the edge. Money is looking for places to park. They need to offset, equities and things like that. Just to be hedged. The old odd pairs trade, I guess you could say. Let's see if we can find it right there. There's the South African rand. You see the rand has been moving down. It's trying. We think it's way over undervalued at this point. We think it shouldn't be at. It's undervalued. It shouldn't be at 19. It shouldn't be at 19. It should be basically at 14 with the way gold is at all-time highs now. But it's not been able to do so because of the politics that's going on down there, and it's starting to get a pretty big haircut. We're looking at a 25% haircut at this point, and that's really very tough. Very, very tough. That's the expression we say on the hedge funds and the money managers. They call it a haircut when you're cutting something and it's being chopped. Haircut. Let's take a look at that more. And there's the South African rand. It's been trying to go down against the dollar. No, it's just trying to gain against. When it goes down, it's gaining against the dollar. And you can see problem is that we're in a weekly buy and it doesn't seem to want to let go. It is touching the manifold. It's through it at the moment, but it really doesn't look like it's breaking down any. Now let's go over and check out. Here it is. There is gold. Look at that. We've gone from 200 to 2134. We've been in a daily buy since here. We've climbed all the way up to there. We've gone up $134 over the last X amount of days and so forth. You see, we jumped into the weekly buy basically right there, where it got through the manifold, and it's caught that wild swing through, really wild swing. So it kept you away from being short here because we were in the daily buy, and now it's taken off, and it's just hot and heavy and running fast and smooth, looking good. And then we go over and look at silver. Silver, thank goodness, it's getting some legs into it. Went into the daily buy right there. And you can see, it's been in the weekly buy all the way back into here in the 22 area. Excuse me, 22 and a half. So, we're starting to see, it's this leap, total leap into inflation protection. I guess they're terrified. Maybe they're scared that, there's serious talk of lowering rates, and if they lower some rates in June, they're afraid that that'll kick up. Also, maybe some of them are paying attention like I do. The core rate on a 3-month average is exploding on the upside, and so we could be at 5.5. We could even threaten 6. The core rate could actually go to 6 in a 3-month average. Where they do this, you take the last 3, and then you subtract out the 12th month each. That's how I follow the core rate. For short-term markets, because we know markets are always very nervous about short-term movement, and so that is the basic core rate, and so to me, I'm looking at that and I'm thinking, whoa, and I've been saying it here. You can go back to our webinars for like the last 3 or 4 weeks. I've been telling you that the core rate is going to explode. And so the next time core rate comes out like that over in the next 2 weeks, we're going to see that number perking its head up, and it could jump even more. It could be even hotter. And it's going to be very hard for them to calm down the core rate just because it's like a stochastic in a sense, the way I follow it. It's like a moving average. And it's telling us that for the next 3 or 4 readings, which is the next 3 or 4 months, it's going to perk like that. And that's probably one of the reasons right there. Now, let's go over to Bitcoin. Because, with the metals complexes, I just showed you gold and silver. And let's look at the cash Bitcoin. So we're going to go into the beta. You can see the same situation there. See if we can get them all up on the screen there at the same time. You can see we've been in a weekly buy since the end of January. Right there. And there's the end of January right there. Oop. Let's see if we can do this. Oh, we just blew it up. Let's fix it again. Like there. And there's the end of January. That week of the end of January right there. So you see that right there. We were in the 40,000 area. Even if you go up to 42,000, that's it's not that bad whatsoever. There's 42,000, and then let's clean that up again. And now you can see we've traded to almost the 70,000 area, and it's gone up 66%. It's been a heck of a move. And it's 67. So 67. It got up to. Am I right there? Let's see, what is it? The high yesterday was... Well, today's now the new high of, right there, of 68,000, basically 800, 68,800, 789. So, from 42. So that's what is that? That's a 50% move. Over a 50% move. It's basically 60. Did I say 66% before? It's like 62%. All right, so we'll clean that up, and that just fits right in with the gold. Gold is doing the same thing. They're all reaching for these, what you would refer to as alternative assets. There's the gold right there doing the same thing. Except for it, did it, over a something like a. What is that? That's the February 11th. Here we are, January 9th. That did it over a 4-week period. And you see we've been in the weekly buy. Let's see, what was that? That was there. So the last 2 weeks we've been in the buy for that. for the most of the run, right there. It's been an explosion, especially these last 3 days. So, and that's where we're at. I said, what markets are you involved in? Ah, that's a good one. Yeah, me or the watchers out there. Robin's been getting into QQQ and SPY, and me, I've been paying attention to the S&P 500. I've been trading that a lot for a while now. To me, that's the crowd. Exactly. Exactly. That's what I thought you meant. I just thought I'd make that clear. Yep. Yep. That action. 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 So there's that Bitcoin. That's a tenacious. Well, I don't blame them. Here's Hong Kong. I just want to take a look at Hong Kong because I heard Hong Kong took it on the chin. Okay. Wow, they did. 110 down to 95. I understand the Communist Conference is not doing too good. They're having some issues about people are not happy with what they're saying they're seeing. Projections for next year. And then let's see. I just want to see the Asian markets since we're on the other half. And we're looking at some of the stock indices. Let's see. Let's see what the Kospi. They've really bounced the Kospi back up. That's the South Korean index. Let's see if we can get that up there. Where is it at? Right there. Yeah, see, that's holding up. That's bottomed out back in January from 2,450, and it's back up to 2,700. So that's gotten back into it. When China started to roll over, they rolled over, which was interesting. And then let's see what the Hang Seng looks like. There's the Hang Seng. That's Singapore. They broke that down to a little bit from the 17,000 down to the 16,000. So they're feeling the pain there. It wasn't a weekly buy now for like the last 4 weeks. So, and it did climb up over the last 4 weeks. You can see that action right there. But they're starting that. The conferences, they're trying to figure out what they. I guess they're putting together their 5-year plan. I don't know how the communists exactly. They do things like that. They decide what they want, how growth will be for the next 5 years. And they'll declare it, and then they'll say they will make it happen. That's definitely not free markets, free people, that's for sure. All right. From there, let's see. Where else do we go? Let's see what the copper looks like. That's basically the crutch of. Let's put that up there. There's right there. That's copper, but just kind of at the top end of its range. They're not. I guess copper would be telling us. You see this move right here before the Communist Party conference started. They were probably anticipating the good news, and then they finally realized what it was going to be. And you can see here they can't seem to get it going. We're in the weekly buy for there it is right there. Was that this is the 4th week, but. Doesn't seem to be picking up any real momentum, and the world is having its issues. Indeed. And then from there, you see that's copper. Let's put the platinum up. Platinum's got me totally perplexed. One thing I don't want to be a short at, but when they're running gold, obviously whoever runs gold, look at that. They're putting pressure on it today. It's been in a daily buy, but it could not get any real action out of it. And it's in the weekly sell. So the weekly has been telling us over and over and over, don't trust us. Don't trust us. Don't trust us. And sure enough, it is very clear and very truthful. It's telling us don't trust it. That's what it's doing. Look at that right there. Yeah, I mean, look at that weekly. They can't even get back up to the 950 area. They tried there once, but then it fell again in that weekly sell, and it's still there. And it just, at least the slow is trying to get through the negative side of the manifold, but it's not getting through the zero line. And you can see the fast is breaking down from being in the plus and heading to break the manifold on the downside. So that's not, I think that's one of the more dangerous pairs trades that exists. I really do. I think that, and what gives me the confidence to say that out loud is that you go into a jewelry store or you see where they're trading physical platinum, and it's still more expensive than gold. And then you go to the exchange floor where the central banks are trading every day, and it's over 50% cheaper than gold. So something's wrong there. The physical side is way more expensive, enormously more expensive than gold. And that is the answer to all that, is don't trade it. Do not. If anything, exercise the contract if you can even do that. I don't even know if you can exercise those contracts. That would be the arbitrage. They've made it very tough exercising that stuff. All right, now so where are we at? We're done the currencies, unless someone wants to see something. And we'll go over and look. We've seen the metals. So now let's go over to the energies. On the old rhythm. Today we're on the old rhythm. I like that. Well, I don't like it, but I'd rather answer questions, but it's better than nothing. Now you can see here, crude oil is trying to dip into the sell here today after 6 days in a buy. You can see the weekly doing the same exact thing. There's pressure building on that right there. And, we're seeing this play with the sell as we speak. April crude. There we are. April crude. Let's just click did he do that? There we are. And so that's that is the action that we're seeing there. Now we go over to we go and take a look at natural gas. Oh, you know what? Let's do this. Let's take a look at Brent. We can get Brent up on the beta. There is Brent trading in the $82 area. It's been in a buy for over a week, just like the way West Texas is. Now that's interesting. Last week it threw itself into the sell, thrown itself back into the buy here. And so we'll see how long that lasts and when it rolls over again. We started the buy off down in here in the 70s. Right there, their weekly buy went in there on Feb 5th. Right there. And it's been relatively sideways. Got that sideways envelope thing going on like everything else, like the currencies. A lot of these things just don't have the action people think. They just don't have it. And then let's put it up on here, natural gas. There's natural gas. It's moved up to the $2 area and backed off. This is the April contract. But you can see we're still in that weekly sell from the $2 area up in here. 210 area, something like that. And you see we went up, hit the $2 area and dropped. We were in a daily buy for the last 4 days. What else can we say about that? And then we go over to, where is it at? Let's go take a look at that. Let's go to the beta. Let's put the natural gas on beta too. There it is right there. Same situation. And you can see, see where it is right there. It's flirting with a buy. It's flirting with the weekly buy right there as we speak. But it's been in that weekly sell since the $2.50 area. Let's see, where's that at? Since January 29th. There's January 29th. The 275 area. And it's broken down to the $1.50. That was fascinating. Now we go over to when we're since we're Eurocentric here, we talk about the markets like as if we're in Europe, not here in the States. You can see here's the energy company down in Spain. And as you can see right there, the thing is challenging, going down to the $20 area. We've seen since we went into the weekly sell there back in January 8th, back in here, where it was at $27. See, we just emphasize that like that. In the $27 area right there. And let's shrink that down. And you can see we're now down in the $21.50 area right there. $20.50, right? And hit the 20.5 and bounced off of it a couple of times. The pressure is on. You can see the daily sell for a while there. Let's clean that up a little bit more for you to see. You see, it's basically been in the sell since the 23rd up in here. So it's been in the daily sell since up in there. Since that $23 area, we've gone down to 20.5. Pretty cool. And that is the only way we can, kind of understand the European market when it comes to energy. It's very tough to be able to read that, So from there, we go over to, so that's the energies. I guess we're done the energies. Anybody care to see anything? Because we're getting towards the end of the day. We got to now kind of, there we are. We're trying to come up with a title today. We're basically 50 minutes into the webcast, and usually we try to have at 55 minutes after, we try to put that out there. So that is the, what did we talk about today? I think it's, it's basically the inflation. Let's see what my title was yesterday, because I probably was yakking about inflation yesterday too. And yesterday was interest rates. I think I talked about interest rates yesterday. I think that's how it really played out yesterday. We started talking about the interest rates, and it won't go away. That's the problem. I wish it did. I wish it was like the Trump years again, where it was parked at one little spot, and the economy was growing. The private sector was growing enormously. Do you know that I say this a lot here, but I might as well repeat it again because just to emphasize it. Under Mr. Trump, the average person gained $6,000 more in income compared to inflation. And under Mr. Biden, they've lost $2,000 in income under inflation. So it's like an $8,000 swing. People can't afford that stuff. That really hurts. So let me see if I can find what I said yesterday. Just not make interest rates in doubt. That's what That's what yesterday's was. Interest rates in doubt. So I think we're going to call today maybe one cut this year. Maybe one rate cut this year. How about that? That sounds kind of good. How about one rate cut this year? I think that's going to be the title. That makes sense to me. Because I don't see how it can be any other way, especially with inflation trying to, at least the core 3-month rate is going to be more firmer than we would. I'll use hedge fund words like firmer and sticky. That's what we'll call it. firmer and sticky. That's pretty much what it's going to come down to. And when it comes to this panic, or let's say aggressive, let's say the hedge fund industry, money managers won't call it panic. What they would refer to it as enormously firm, or what is it? They have another name for it too. In other words, watching gold go to all-time highs, or the Bitcoin go up to all-time highs, they would refer to that as very firm market. It's a very firm market. Yeah, and in demand. They like to say stuff like that too. Like, it's very, very firm and in demand. Alrighty. Alright, traders. If there's no other questions or anything like that, we'll be trying to get out of here, I guess, you know. Janos, you out there? You need anything today before I go? You want to see MVO or AMD or anything like that? If not, we'll get out of here. All right. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, later. Hang tough, hang smart, and some news is going to start kicking out. It is going to be somewhat of a busy week. Tomorrow, I think, is the ADP. I think it's tomorrow. Or is it today? Let me see. I have something here that would show it, too. I've been saving this. There it is. Let's show you this. Let's just go down to there and leave it on that. Oh, I did have it right there. ADP is tomorrow at right in the middle of our webinar. The ADP will come out, employment. And then on Thursday, we have jobless. And then Friday, we have the big one, big labor participation rate. And average weekly hours is a high one. They're really going to be watching that stuff and the earnings. So, and then they'll be watching private payroll, all those numbers. I'm trying to see anything else. Is there anything today? Factory orders at 9:40. Let's see, the PMI today. Traders, be careful. In the next hour and a half, PMI will be coming out. So, all right, traders, we will catch you all tomorrow, same time, same channel. So, arrivederci to all.